Okay, so we're going to discuss audit opinion and the different types of audit opinion, and in what situations can you give each kind of audit opinion, whatever circumstance there will be. So we're going to dig deep into that right now. So let's see. Okay, the types of audit opinion. We have two main types of audit opinion, and that is unmodified audit opinion and a modified audit opinion. So when we start with an unmodified audit opinion, it simply shows that when the auditor has already gathered sufficient appropriate evidence, and it seems that the financial statements give a true and fair view of the entity's affairs and has been prepared in accordance with the IFRSs, then that will mean that the auditor will issue an unmodified audit opinion. And under an unmodified audit opinion, you can also include an emphasis of matter paragraph, which we know that it draws users' attention to a particular matter in the financial statements that has been properly disclosed. And it's also fundamental to the user's understanding of their financial statements themselves. So that is why we usually say that the emphasis of the paragraph does not modify the audit opinion. Therefore, it can be included in a situation whereby the auditor gives an unmodified audit opinion as well. So moving on to modified audit opinion, we have like three types of modified audit opinion, which can be a qualified opinion, disclaimer opinion, and adverse opinion. So if we go deeper into the main reasons that you can find that an audit opinion has to be modified, it will be disagreement and insufficient audit evidence. So in disagreement, this can be in a form whereby you as an auditor will disagree with the application of certain accounting policies that have been used by management, or a treatment of a particular item that has been used, that the management have done in the financial statements. So those kinds of, you might find like the treatment of maybe inventories or treatment of receivables in the financial statements, it gives a misstatement which is material, then it means that you have to issue an audit opinion that is modified. So when we reach to the reasons for disagreement, that means that you disagree with the auditor on how they have treated a certain item in the financial statements, and that might give a material misstatement. Therefore, it will have a huge effect on the financial statements, and therefore you have to modify the audit opinion. So in the other reason, it will be insufficient audit evidence, whereby you as the auditor may not be able to gather enough evidence which you can find sufficient and appropriate for you to even obtain or give an audit opinion. So these audit opinions, as we said here, it will depend on the material and pervasive nature of the matters above. So it will depend whether that disagreement or that material misstatement, is it material and pervasive, or is just material but not pervasive. So in situations, you kind of find different situations whereby you find like a certain matter is material but not pervasive, and you find that maybe this certain material is material and pervasive. So you have to know which type of audit opinion that you need to put as an auditor. And when you go deeper, maybe for example, when you go to under disagreement, whereby for example, as we've said, that the auditor disagrees on management's treatment of certain item, and that treatment gives out a material misstatement. So in this situation, whereby there's a material misstatement, you'll find either you can issue a qualified opinion or adverse opinion. And in the situation whereby you issue a qualified opinion is whereby you find like the matter is material but not pervasive to the financial statements. And when we talk about pervasiveness, we talk about the effects that matter has on the entire financial statements. If that matter will totally distort the entire financial statements, then we'll realize that it is very pervasive, that there's a significant effect on the financial statements. So we'll say that that's pervasive in nature. Therefore, in situation whereby maybe that disagreement doesn't have a significant effect on the financial statements, like the entire financial statements, you say that it's not pervasive. So it's just material but not pervasive. So you'll issue a qualified opinion But if that issue or matter in hand is both pervasive and material, then it means that it will not give a true and fair view of the entity's affairs. Therefore, you will have to issue an adverse opinion. And following the other reason, whereby we focus on insufficient evidence, where we've said that, for example, like management may not be able to issue an audit opinion, maybe because of different reasons. So in insufficient evidence, you might find that it's limitations imposed by the management, which we call limitations of scope. For example, maybe management doesn't want to give you certain information, so you're not able to uh, you cannot able to give out an opinion on that. So that means that you can't be able you're not able to or give out an audit opinion, or maybe you find like maybe that matter is just material but not pervasive. So if that matter is material and but not pervasive, as we've said, you will give out a qualified opinion. But in a situation whereby you can be able to express your opinion on the financial statements entirely, whereby you find like it's both material and pervasive, then you issue a disclaimer of opinion. For example, like let's say circumstances that are beyond your own control or even beyond the control of the entity. For example, if there was a fire or if there was a catastrophe, maybe the entire building burnt down. So all the receipts or all the files that the auditor would have relied on to provide an audit opinion have all gone up in smoke. So you see like that situation has made it material and pervasive because it will have a significant effect on the financial statements as a whole. So therefore, we say that it's material and pervasive. Therefore, the auditor will have no choice but to issue a disclaimer of opinion. So that is how you can be able to assess these situations under materiality and pervasiveness. So you have to be very keen on what to put uh, or give as an audit opinion. So you have to go back to two different uh, reasons as to why you modify an audit opinion, and that is one being made you a material misstatement, and two, it being um, insufficient evidence. And under those reasons, you find like you issue either qualified opinion, adverse opinion, or even a disclaimer opinion, but it will depend on the materiality and pervasiveness of the matter of the matter at hand. So you have to be very keen to know the reason as to why the audit opinion has to be modified, and also understand under what circumstances of materiality and pervasiveness does that matter fall into, so that you can be able to give a audit opinion that is suitable to the whatever case study that you'll be given in the exams.